Firstly, we'll be joined by Niall Macentee-Creighton, who's Deputy Director for Rules of Origin and Tariffs in the Department for Business, Energy and Industrial Strategy. Julian Ainley, Deputy Director of Customs and International Policy at HMRC, will then speak on the technical detail of what the deal means for manufacturers. Both our speakers were part of the UK's negotiating team, so are ideally placed to give insight here. There'll be a short Q&A session after the first two presentations are over, and the session will conclude with a short presentation from Keith Robe, Make UK's customs expert, who will offer insight into on-the-ground implications for businesses. However, before we begin, just a few very quick housekeeping items to note. All attendees are in listening mode only, and only the panellists' videos are visible. If you want to engage with panellists or to ask a question, please do so by typing your question into the Q&A box in the Zoom control bar at the bottom of your screen. We won't be using the chat because there's so many of you on the call, so please use the Q&A. Aaron, Moran and I will be moderating any questions during the Q&A session, which will follow the presentation today. We're not, as I said, using the chat function with so many of you on the call, so please, again, if you use the Q&A, it means we can actually print out afterwards and we can hand on your questions and hopefully come back to you later. Finally, today's webinar is being recorded and will be available on the website afterwards, and we'll be sharing the slides with everybody who is on the call today. So please let me hand over to Niall Macentee-Creighton from BEIS. Thanks, Niall.
Thanks, Hilary, and thank you very much to Make UK for having us along today. It's great to reach so many businesses and your members in one go, so that's fantastic. I'm going to share my screen now. We have done a practice run just a few minutes ago, so I expect this is going to hopefully work. So can everyone see the slides at the moment?
Yes, that's perfect.
Yes,
you can, fantastic, okay. So I'm going to take you through now a presentation setting out some of the changes that have come about since we left the European Union Customs Union and began trading with the EU on the basis of an FTA. So we're no longer part of the EU Customs Union. We're trading under a new relationship, the Trade and Cooperation Agreement. This is a free trade agreement. This means that UK goods exported to the EU are eligible for zero tariffs if the goods meet the rules of origin requirements that are set out in the agreement and have the right documentation to prove that. So if those goods don't meet those rules and they're being exported from the UK to the EU or vice versa, then they may be subject to tariffs. Rules of origin are a standard part of an FTA trading relationship. So what are rules of origin and why do they exist? Rules of origin determine the economic nationality of a good. So they're a standard part of free trade agreements, and you need them in free trade agreements so you can identify which goods should trade under the zero tariffs that FTA establishes. And so they basically ensure that only goods made in either the UK or the EU can benefit from the zero tariff agreement. So it's a bilateral free trade agreement. It means that only goods produced in the UK or the EU should benefit from zero tariffs, and goods that are made elsewhere and shipped through the UK or the EU should not benefit from zero tariffs. That's a key reason why rules of origin exist. So there are different rules for different goods, what we call product-specific rules. And what we're going to do in this presentation is we're going to look at some of the product-specific rules you will find in the Rules of Origin Annex of the Free Trade Agreements. And we're also going to look at some of the process and the documentation you will need to comply with Rules of Origin. We're going to just quickly talk about the difference here between distribution and production. So I know there's been coverage in the press, and I know that lots of retailers and distributors have been grappling with the changes that have come into effect since 1st of January. And it's just really important to set out that because we're trading outside the EU Customs Union now, it means that goods that are moving into Great Britain, they can't freely circulate, can't freely move between Great Britain and member states. when they're moved into GB and then leave GB, they need to comply with rules of origin to be eligible for zero tariffs. So that's the difference between us being inside and outside the customs union. If you are trading under an FTA, your export needs to comply with rules of origin to avoid the tariff if there is a tariff due. And what this means in practice is that there needs to be a qualifying level of production in the UK. So this also applies to EU origin goods, as well as the goods from the rest of the world. So if you're bringing goods into GB and you want to export them to the EU zero tariff, you need to be doing a qualifying level of production on those goods before you export them. And the terms and conditions are set out in the free trade agreement and in the product specific rules for each product. So if you move goods through GB from one EU member state to another without the goods entering UK customs territory, then the goods may not need to comply with rules of origin. And there are particular special customs procedures that can help you there. In particular, transit, customs warehousing, and I'm not going to cover those in detail now. I'm going to let my colleague Julian from HMRC talk to you about those in more detail, and they are most relevant if you are distributing or moving goods through Great Britain. So, for example, from France to the Republic of Ireland, or from France into GB and then back to a mainland country in Europe, say Spain. So if you are doing that, then there are a couple of customs special procedures that you should be aware of, and I'll let Julian cover those in a bit more detail, but we're going to focus for the rest of this presentation on rules of origin and what you might see in the agreement. So exporting goods to the EU. There are 3 steps that you need to go through as a UK exporter if you want to claim zero tariffs on your exports. So firstly, you need to classify the goods that you're exporting. So you need to know what its classification code is, what its harmonized system code is, that will help you determine which rules apply. Then you need to understand whether the good that you want to export meets the applicable rules of origin. And then you need to understand how to demonstrate that to the customs authorities. And in the following slides, we're going to take you through each of those 3 steps. And it's worth noting here that you may choose to use a customs agent to help you navigate this process and do rules of origin. And if you do want to do that, then there is advice on gov.uk to help you find a customs agent. You are still going to need to, in many cases, you're still going to need to provide evidence to that customs agent if using one. So the first step, classifying your goods. So when we're talking about free trade agreements and international trade, we are using a World Customs Organization harmonized system for goods classification. So this is internationally standardized, and it describes your good at a 6-digit level. So lots of you will be familiar with the commodity code of your good, which is a bit longer, 8 or 10 digits. But what's important in free trade agreements is the first 6 digits, the 6-digit level description of your product. So you get goods they're categorized in the harmonized system in 3 ways. They're in chapters, which is its first 2 digits. They're then described at a heading level, which is the first 4 digits. And then the thing that you need to know to classify your good for the free trade agreement is the subheading at 6 digits. So there's an example here for helicopters. They are found in chapter 88. They're found in heading 8802, and the subheading is 880211. So that's small helicopters of a weight not exceeding 2,000 kilograms. You can use the tariff lookup tool, which is on gov.uk, to classify your goods. So if you just Google tariff lookup gov.uk, you will find that tool there, and that will help you classify your goods. The second step, the second thing you need to do is to understand whether the good that you're exporting, so you've got the commodity code, you've got the harmonized system code, you need to now understand whether that product, whether that good meets the applicable rules of origin. You need to what you need to know to do this is you need to know about two things. You need to know about your manufacturing process, and you need to know about your supply chain. So you need to know where your inputs are coming from. So if you're making a product in the UK, you need to know where the materials you're using to manufacture that product come from. You need to know their origin. So we'll touch on what we call bilateral accumulation in a bit more detail on a further slide. But when you are thinking about rules of origin, you have the good that you're exporting to access zero tariffs needs to be UK origin, and you can count all UK origin materials when you're counting them as originating. You can also count EU origin materials used in your production if certain conditions are met, and that's called cumulation. We'll come back to that in a slide a bit later. But if your good incorporates any material from outside of the free trade area, so from outside the UK or the EU, then you need to comply with the product-specific rule to export that good tariff-free. So if you're incorporating in your materials anything that is not UK origin or is not EU origin, then you need to comply with the particular product-specific rule for that product when you export it. The product-specific rules are set out in the agreement. There are different rules for different products, and you need to engage with those rules to understand if you comply with them. When we're talking about product-specific rules here, there are broadly four types of rules. So the first rule, I think, which is less applicable for Make UK members, is for products that are wholly obtained, and that means that they are grown, born, extracted wholly from within the UK's customs territory. So here you're mostly talking about agricultural products, vegetables, but it also applies to things like minerals, things that are mined from the ground. The next rule that you will come across, and this is a very relevant rule for Make UK members, is a change in tariff code rule. And what this means is that any of the non-originating inputs into your product, so the things in your product, the materials in your product that are not from the UK or the EU, any of those must be classified in under a different code to that of the product that you're exporting. And what's that designed to do? It's designed to make sure that you are doing significant manufacturing in the UK. And we'll talk through that rule in a bit more detail shortly. The third type of rule that you will come across is the value added or maximum non-originating rule. It sounds a bit complicated, but essentially what it's saying is that if you are incorporating non-originating materials in your exports, so if you're incorporating things that you are using to manufacture your product and they don't come from the UK or the EU, there is a limit on the value of those materials. So when you export that product, your customer will pay a price for that product, and the non-originating materials for you to meet the rule must not be over a certain threshold, the value of those non-originating materials. And again, we'll talk of this rule in a bit more detail. The last type of rule that you'll meet in the agreement is a specific processing rule. And this sets out in the text of the agreement exactly what manufacturing process you have to have gone through to meet the rule. So I'm going to come back to that slide shortly, but just to go through these rules then one by one with some examples to help with clarity here. So a change in tariff heading rule. So that essentially means that you have to demonstrate that any non-originating materials that you've used in production of your product are classified in a different heading. That means a different 4-digit code to the product you are exporting. So in this example here, the product we're exporting is a mug. We're manufacturing that mug in the UK. We are importing in the top row here. We are importing clay from China. The clay is in HS heading 2508. We are then manufacturing that clay into a mug. the mug is classified in HS heading 6911, and we're then exporting that mug to the EU, and we're claiming zero tariffs when we export it. So that top row there, that is a green tick. It meets the rule of origin because the non-originating material, which here is the clay from China, is classified in a different heading, different 4-digit heading to the product you're exporting. So you can use your statement on origin to claim origin when that export goes to the EU. And the reason here is that you are deemed to have done enough production for this product by turning clay into the mug. If you look at the second row, you are importing a mug without a handle from China. That's classified in 6911. You are then attaching a handle to that mug and exporting it to the EU. So in that case, you don't meet the rule of origin because the mug that the inputs you're manufacturing, the non-originating material from China, is classified in the same heading as the thing you're exporting to the EU. And that means that you are deemed not to have done enough production on that product in the UK for you to meet the rule of origin. So in that case, you don't qualify. And if there's a tariff on that product, an EU tariff on that product, then your importer has to pay that tariff. So that's a change in tariff heading rule. You will meet that rule very often in the product-specific rules across the agreement, but particularly in the chapters that I think are most relevant to lots of people on the calls, chapters 84, 85, and also the parts in 87 in some respects. So there are lots of product-specific rules in chapters 84 and 85, and lots of them will have a change in tariff heading option. And that's all about the classification of your inputs, how they differ from the product you're exporting. The next type of rule that you meet in the agreement, and again very prevalent across chapters 84 and 85, is a maximum non-originating materials rule. We also call it a value add rule quite often. And this example here is for a transmission shaft, so an important part of an engine, classified in 8483. If you look at the top row here, so this is all about what's the value of the non-originating inputs into your production process. So the top row here, you are importing some non-originating parts for your transmission shaft from Canada. The value of those parts is £300. So that's how much, that's the customs valuation of those parts, how much you pay for them. And then in the UK, you are manufacturing your transmission shaft using those parts. And in doing so, you are adding £350 value. So that includes UK origin parts and also your manufacturing costs in the UK. You then work out how much the value of your non-originating material is as a proportion of your ex-works price. And that's the price your customer pays for your product minus any transport or any taxes. So it's the price, we say it's the price for the product as it leaves the factory door. So you work out the proportion of the value of your non-originating materials and what proportion that makes up of the ex-works price for your product, how much your customer pays as it leaves the factory door. If that is less than 50% in this case, then you meet the rule of origin. So if you can demonstrate that more than 50% of the value of your product is from UK originating materials or is added in the UK, then you meet the rule of origin. So in the second example, below the line, you've got non-originating parts imported from Canada. They're worth £400. You do production in the UK using UK originating materials and your production processes, and that production only adds £250 worth of value to the product. So overall, you haven't added 50% value. So the proportion, the value of the non-originating materials is more than 50%. That means your product does not qualify. So I can see lots of questions going to the sidebar. and we will pick those up at the end in a Q&A, but I'm just going to crack on with the presentation and come back to those. Then the last type of rule I'm going to go through now is the specific processing rule, and this is often given as an option in some PSRs. The rule that we're looking at here is for spectacle lenses. They're classified in 9001.50. And what the rule sets out on specific processes in the actual legal text of the agreement, in the annex, it describes the manufacturing process your product needs to have been through in the UK. So for this particular product, for spectacle lenses, you have a choice. You can do a change in tariff heading, you can do the specific process, or you can do the value add rule, the maximum non-originating rule. But if we just look at the specific processing rule there, actually describes the manufacturing process the product needs to have gone through. So you need to have surfaced the semi-finished lens into a finished ophthalmic lens, or you need to have coated the lens with appropriate treatments to improve vision and ensure protection of the wearer. So if you've done those processes, then your product originates. But in this case, you've got a choice of 3. So those are the 3 rules that you will often meet in the free trade agreements. And obviously we didn't cover wholly obtained, but I think that's reasonably self-explanatory, and that it has to be extracted, grown in the territory. If we just flick back here, so an important thing that you have in the free trade agreement is that when you are manufacturing, you can count EU materials and EU processing as if they were UK originating. So if you're manufacturing in the UK, I can count my inputs from the EU as if they were UK origin. I can also count the processing undertaken on a non-originating product in the EU as if that processing took place in the UK. So that's a really important facilitation for UK exporters, and it also applies going the other way as well. And what that means is that it's incentivizing trade, and it means that it's recognizing supply chains there. And this is a typical thing that you'll find in free trade agreements. What is really important though, when you are using EU content and you are applying cumulation, is that for your EU material to be considered as UK originating and count as UK originating in your manufacturing process, the production you do in the UK must go beyond what we call insufficient. So there must be sufficient production in the UK for that EU material to count towards rules of origin. And that's a key thing. So the list of insufficient productions processes is set out in the agreement. And if you look at the agreement, you will find in the insufficient production article, you will find a list of processes that if you're manufacturing in the UK using EU materials, you must go beyond these processes to meet rules of origin and to count that EU material as a UK material. So that's a key thing. And there are some of the insufficient production processes set out there. And I think the key word for lots of this is simple. If the thing that you're doing in the UK is simple, it doesn't require special skills or machines or apparatus or equipment, then it could be insufficient production. And what we'll do on the rules themselves and how cumulation and insufficient production interact, we can take questions on those and come back to those. But I'm going to move on now to the third step, which is that you need to, once you have classified your product, once you have looked at the rule for your product and you have determined that you do meet it, then you need to prove this to the customs authority. So you need to have evidence, is the first thing. You may need to have evidence from your supplier. So if you are using a UK or EU originating material, you may need to have a supplier's declaration from your supplier that confirms that the EU, the thing that you are using from the EU or the thing that you're using from the UK is UK or EU origin. Under the agreement, you can self-declare the goods meet rules of origin by making out a statement on origin, or your importer can use what we call importer's knowledge to make a claim. And if they're doing that, then they are relying on information that they have to make that claim. So they must have enough information about the good that they are importing to know themselves that the good is originating under the agreement. And there's a facilitation in place for this calendar year, where if you are a UK or an EU exporter and you're claiming preferential origin, you're claiming zero tariffs, you do not need to have your supplier's declaration from your supplier in your hands when you make out your statement of origin and export your good. So what you do need to know is you need to know as well as you possibly can do, that the material, the inputs you're manufacturing from your supplier is UK origin or is EU origin. You don't need to have the supplier's declaration in your hands when you're actually making out the statement of origin and exporting that. You must be confident though. And what happens is at the end of the calendar year, you may be asked to provide that document if you are subject to a verification from a customs authority. So you need to be collecting that document from your supplier. You don't need to have done that until the end of the calendar year. And that just gives exporters a little bit more time to work with their supply chain to get the right documents through to them. But essentially, this is not saying that you don't have to have suppliers declarations. It just means you have a year to get them in place, and you may be asked for them after that year has elapsed. And that's the same if you're exporting UK to EU or importing EU to UK. So the next we're going to talk about how you import goods from the EU and claim zero tariffs. So you need to claim zero tariffs on your customs declaration. And to do that, you need to have proof that the goods you're importing meet the rules of origin. So as I've just discussed there, there's two ways to do that. So you either need a statement on origin from the person that you are importing from in the EU, or you can use importer's knowledge that the goods are originating. So if you're using importer's knowledge, as we said, you need to have sufficient evidence that the goods meet the rule of origin. And this may involve you having a range of different documentation to prove that. It's important to note as well that when you are importing goods into the UK, HMRC, and again, Julian can talk about this in a bit more detail, are taking a staged approach to customs controls. So this means until 1st of July, you do not need to complete full customs declarations, and you do not need to pay customs duties the first 6 months of this year, and those controls will change after the first 6 months. This is only one way, so this is only for imports coming from the EU to the UK. I'm going to finish the presentation there. That was a bit of a canter through. There's a lot of information to take in, but as I said, we will be hanging around for a Q&A and answer as many questions as possible. But I'm just going to end here on some important links, and when these slides come round to you, they will take you through to some different tools that are available on gov.uk, to the full gov.uk rules of origin guidance, and also to an on-demand webinar which runs through these same slides as well. So I'm going to stop there and look forward to taking questions a bit later. Thank you.
Thanks very much, Niall. That was excellent. If I just quickly now hand over to Julian Ainley, Deputy Director of Customs and International Policy at HMRC, who's going to drill down further into the detail. Thanks.
Hello, everybody. Right, I'm just grappling slightly with this because we can't access Zoom on our work computers, so I'm just getting used to it on my personal laptop. Right, just one moment. Right, let's just use that. Can everyone, if people can't see that, please jump in and shout. I'll try and maximize the page.
We can see fine, thanks.
Great. Right, okay. I've got quite a slide pack. It's about 56 pages, which covers not just rules of origin, customs procedures, but some associated customs rules that are sort of closely linked, as it were. The slide pack will be available for circulation afterwards, so don't worry about that. I'm not going to cover all of it. I don't have the time, and I think your brains will be saturated by the time I try to cover it in one session. So the intention is to cover the sort of key areas and the bits of getting businesses confused. And then we can always track back to particular slides if that would help. I'm generally going to chop it into two. One part is on rules of origin principles, when products gain or lose preference, and what customs procedures may be available to mitigate tariffs if a good loses preference. And then I'll cover the sort of documentation requirements after that. So that's the broad order. Okay. And I was following through the Q&A chat questions, and yeah, some of those will come up here, so the answers, and then we can cover the rest later. So, okay, let's just the basics. You obviously need to classify goods. That's fine, the right commodity code for them. Then look at the correct origin rules, check the goods meet the rules, and then the final step is sorting out the supply chain documentation, and that's where HMRC and customs comes in. There's almost a fifth step. If you're not happy, consider various other customs procedures or whatnot to potentially mitigate tariffs. Okay, right. So I'm not going to cover classification. It's its own area, but there's a link in the end for those that want to find some guidance on that. Right, so just covering some of the sort of core basics of origin. I think Niall's covered quite a lot of this already. Just worth making the distinction that for customs, there's preferential origin, which is what most people are used to dealing with, but there is also non-preferential origin. We are receiving some slightly worrying occasional reports of member states refusing to accept goods that are going in at MFN, the standard tariffs, or if the standard tariff is zero, it isn't affected by the trade agreement, then they're asking for documentation. Really, non-preferential documentation should be very rare, only when there's sort of safeguard, really, when there's a, for example, steel or something like that, where there's a safeguard for that particular product. Okay, so I'll skip past that. Right, preferential origin, Niall's covered that. So just covering this gaining of origin status. Again, Niall's covered this in some quite a lot of depth, but just worth reiterating. Essentially, the status is gained if the product is grown or manufactured in that country. And as soon as you're moving it out, you're generally expected to do something with that product. You're not just passing it on down the chain unaltered. So really, it's about adding value within each territory that product is then moved to. But the trickier bit is when goods lose preferential origin status. And we're getting quite a lot of questions about this. Essentially, when you move that good out of a country and you import it somewhere else, the point when it loses the preferential status is when it enters free circulation. The way I think of it is a bit like the origin of a product is baked in, like a stick of rock. You know, if clothes are made in China, those clothes are Chinese, it's within them. the whether something gets preferential treatment when it's landing into a country, it's a bit, I think of it a bit like a wrapper. The wrapper can be removed, it can go, but the core essence of the origin of the good stays the same, unless it's then processed and turned into something else. So if you're bringing goods into the UK, once they're past customs, once they're in free circulation, then they're losing that preference is used up. They may come in at zero tariff, but then once they're in, they don't become a UK product. They're still a product from wherever you got them from in terms of origin. So if you're bringing, say, Chinese clothes in or something, you bring them into Great Britain, you enter into free circulation. If you're moving those goods from Great Britain into the EU, those are not UK products. They are still of Chinese origin. So you might bring a car in from Japan, zero tariff, because we've got a free trade agreement with Japan, into GB, great. But if you then move that car, obviously unaltered, you can't do much with the car, into the EU, you're going to lose that preferential status. And that's the whole advantage of being in a customs union, a single market. You can move those goods around. Okay. And this is just a really important principle. So I'm sort of stressing it quite a lot because it's quite key. However, under certain conditions, if goods are moved into Great Britain, whether that's from the EU or outside, they may be able to be moved on either to a different country, a third one in the chain, or actually returned and not actually have to pay tariffs. And that may actually be a relief instead. Okay, so I'll cover this, don't worry. So there's really two methods for returning goods. We get a lot of questions of I've brought something in from the EU and then I want to send it on to Republic of Ireland or even Northern Ireland. If you bring goods in from Germany into free circulation into Great Britain, and then you want to send them on to, say, Republic of Ireland, you might be able to get zero tariffs when you're bringing those goods in from Germany. But then when you send them onto Ireland, if they're unaltered, if you haven't processed them to turn them into a UK product, then you're facing standard EU tariffs. And this is where these distribution hubs have come into a problem, because people are used to, traders are used to bringing goods in, plenty of different types of goods, and then moving the excess or a proportion into Republic of Ireland or back to the EU, and they're getting faced with tariffs. There's two ways to mitigate this. Both have a administrative burden, both need thinking about. That they're not a silver bullet, either of them. One of these is to bring the goods in under what's called a transit procedure. If you're bringing EU goods in, it's the T2 transit procedure. So you bring them into the GB, you're bringing them, then putting them into a customs warehouse without a pause, without bringing them into free circulation at any point. And very minimal changes. We're really talking about separating a pack of 500 boxes of sweets into a pack of 300 and a pack of 200, and then sending those the half of those goods onto the EU again. Once they leave the customs warehouse, they'll have to go straight into that transit procedure again. So it's not ideal. There's a fair bit of admin involved, and you've got to keep a continuous audit trail, but it is possible. So transit into a customs warehouse, minimal changes, and then transit again. And essentially, you're not actually claiming preferential status at all for those goods in Great Britain. They're kept under customs control all the way through, and essentially in a loop. EU, and then not really touching the sides in GB and going back again. Okay. There's another method to return goods to the EU, and this is via something called returns goods relief. And it's a relief. It's not about preference, and it's essentially very similar to having an item of clothing where you've kept the receipt and you want to take it back to the shop and get a refund. The principle is exactly the same. And of course, it has various terms and conditions attached, and it has administrative burden as well. So if you are considering this or the transit and customs warehouse procedure, then please take a look and look at the guidance, look at the rules, and have a think about whether either one may be applicable to your circumstances. Okay. But certainly this is quite a fundamental point that people are grappling with. I've got some diagrams later for those like me that like something visual to understand this. So I'm going to scoot very briefly past these other relevant customs procedures, partly because I'm certainly not an expert. This is an area outside my specialist subject, and we don't really have time to cover them. So again, if you're thinking about preference, think about keeping goods in customs warehousing, particularly if your goods are coming through a country. If for example, you're bringing goods from rest of world outside of Europe to Great Britain, and those goods are going through the EU, or they're going through Great Britain to the EU, I would think about customs warehousing to preserve the preference. Because if they come out at that intermediate stage into free circulation, then you will have to process them in order to gain preference again. Okay. There's other procedures as well. Inward processing, which is essentially for rest of world goods coming to GB. You don't want to pay duties straight away because you want to actually process them into GB before then exporting them again. If that sounds familiar, I suggest taking a look at that. Outward processing is where you're moving the goods out often for repair somewhere else, and rather than being charged the full value of the goods plus its improved status when it comes back into the same country, you can look at outward processing, and you're only charged customs duty on the added value. And the EU's got exactly the same rules for that as we do. Okay. And in the slides, there's a bit of an explanation about the limitations of these special procedures and what you have to do to think about it. Okay. And there's a bit on customs warehousing, which I won't go into any real detail, so I'll skip through all this really. So just think about supply chains. I've got some basic example here, which is just illustrating points that I made earlier, really. I use silver as an example. I've no idea what the rules of origin are around silver. I just put it out of thin air. But let's say it's eligible for zero tariffs if brought in from well, Germany used to mine it, didn't they, in medieval ages? I'm not sure they still do. But let's say it's coming from Germany into the GB. It gets zero tariff under the trade agreement. Now, you can't just return that silver in its unaltered state to the EU. You have to think about either returns good relief or this whole transit warehousing procedure. Okay. If you want to claim preference when sending those goods back to the EU, then again, they've got to be turned into a UK product. So it's like turning silver into jewelry, and then it has to meet the rules of origin as set out in the trade agreement, which Niall talked about. Okay, Northern Ireland is the same. If I have time, I'll briefly touch on Northern Ireland. Essentially, exporting to Northern Ireland is very similar to exporting to the EU. I would say if you're moving goods from GB into Northern Ireland, in terms of preference, I'd think about it's as if it's going into the EU really. But then you also have the NI specific rules. Okay, and again, if you're bringing goods in from Germany, pausing them in GB and then wanting to send them on to Northern Ireland in an unaltered state, then we would apply returns goods relief on the EU's behalf between GB and Northern Ireland. And again, you can consider warehousing or that transit procedure. Rest of world example, fruit brought in might be from what we call a GSP country. So we offer unilateral zero tariffs for eligible goods from developing nations. So it might come in at that. or it might come in through a UK free trade agreement at zero tariff. Then you've got to do something with that fruit if you want to export it to the EU. You're going to have to turn it into, I don't know, potentially fruit juice. Again, I'm not sure what the rules of origin are around fruit juice, so that might be rather dubious. And I'm sure there's a sugar content rule as well to go along with that. But really, you've got to change that good if you want to re-export it. Okay, right, and same with Northern Ireland. And going back to this idea about keeping goods under customs control, bringing in a product from rest of world, if you're keeping them under customs control, if they arrive in the UK, transit to a customs warehouse, kept under customs supervision, unaltered, you can then export them to the EU, and essentially the EU will, it's essentially as if they've never stopped in GB. It's as if they've come straight through without stopping. So whatever treaty the EU has with the country of origin, and they also have their generalized system of preferences, which is pretty much the same as ours now. We essentially copied theirs. It's essentially looking to say, well, what do they have with that country of origin, and almost treating GB as a pass-through place, which it is really. But if those goods come out in GB into free circulation, they go through customs, they lose that preference. So you've really got to be thinking, where are the goods ending up? Where are you actually going to send those goods to as a final destination? And thinking about, right, what do you need to do in terms of documentation and preserving the preference status of those goods to get them there in order to claim zero tariffs, okay? Right, I've got a whole various, these are slightly older slides, and really just thinking about the documentation requirements. I might come back to these actually. Right, let me just, so I'm just trying to move the video because it's getting in the way of to see my slides. Just a minute, that's better. Right. So just in the basic terms of documentation, and I'll cover this in a bit more detail. Supply documentation, don't need to worry about having it to hand, having it in place for the first year. Although we do expect if a compliance check happens by the EU or UK after that year has expired for goods moved within 2021, we do expect a supplier declaration to be able to be provided essentially retrospectively. So please do think about that. It's a delay rather than an easement. And then if you're bringing those goods in from the EU to GB, as Niall touched upon, you've got two options. Importer's knowledge, which is essentially importer says, right, I'm taking responsibility for this. I have a really good understanding of my supply chain. I've got good evidence. If I'm bringing German yogurt into GB, I'm the importer, but I know if compliance activity happens, I can very easily demonstrate that the cows the milk came from were all happy German cows. The processing, turning the milk into yogurt is all done in Germany, not a problem proving EU origin. Or you can have a declaration on origin from the exporter, and essentially that's the exporter saying, in this case, the EU exporter saying, right, I'm the one that has the best understanding of the supply chain here about the originating status of these goods. So I'm happy to make that declaration. It can be on any document, really. I mean, our guidance says commercial documentation, just because folk can get rather confused and think that they have to draw up some special legal document. They really don't. We just want to see that statement on origin somewhere on the accompanying documentation of whatever type. So it can be on the invoice, it can be on bills of lading, whatever really. And do note that if you're bringing goods in from the EU to UK, we actually have £1,000 de minimis threshold for that declaration on origin. So you could claim, there's a different document code that you put in when you're making the import declaration. And there's one for declarations and origin, there's one for importer's knowledge. You could put in declaration and origin code, but then you could also say, right, you don't actually need that declaration on the invoice or whatever, if the goods don't exceed £1,000. And the EU have got their own rules, a bit more fiddling. It's only for private goods, really. So we're a lot more generous than they are for that. Right, I'm going to just zip through these because I'm slightly running out of time, just to cover some of the documentation. Well, Northern Ireland, just briefly on this, it's best actually when these slides are sent around, if you've got any interest in Northern Ireland, this is quite a good slide, I think. This is my reference slide. It's very different depending on whether your goods are coming from the rest of the world, in which case, if you want preference, you've got to think about matching rest of world, the UK's trade agreement with that rest of world country and the EU's trade agreement with that rest of world country, and seeing if the tariff is going to be the same. So a little bit fiddly there. Obviously for Republic of Ireland to NI, it's nice and simple. And for GB, as I mentioned earlier, I'd essentially treat as if you're entering the EU. I know guidance on this is about to be published, a bit more in-depth guidance. Hopefully, I think next week. It's just going through the final touches now. So hopefully that will be of use to those that are trading with Northern Ireland. Okay, I just moved past really, but there's an example there, and there's a supply chain example as well. So hopefully that'll be helpful. Right, documentation. Please do look at the guidance. We've got lots of guidance published on gov.uk. It's not always the easiest website to find your way around, but it is on there, and there's about 40 pages of guidance on rules of origin there, with plenty on the documentation. So do have a route around and see what you can find. Very simply though, there used to be, the old method of proving origin was to create a pro forma certificate really for each consignment, and then send it into your customs authority or British Chambers of Commerce in the UK. And they would then review it, and they would then stamp agreement. And those certificates sometimes had a very short duration before they expired. You can imagine how administratively burdensome that would be now. So both we and the EU recognise this, and the EU UK agreement, it's all about self-certification. It's all quite light touch. I appreciate it might seem hard to work out for you, but once you get the hang of it, hopefully you'll realise that it is as light touch as any modern free trade agreement for documentation purposes. And you need the EORI number if you're a UK exporter. And for EU, you have to think about RECs, and they should be producing their own guidance on that, really. So, statement of origin. I don't think there's anything new on this slide I haven't already mentioned. We do expect there's a certain element of due diligence, rather than people just write out a statement of origin without thinking about it. You know, we do expect you to actually make sure that the rules of origin have been adhered to. And again, just making my point really earlier that it can be on any document really that's accompanying the goods. Really don't want you know, to make it a difficult regime to follow. If you are getting, if you are finding member states are pushing back on where the statement is put in terms of documentation, please do let us know, and we can follow it up with the Commission. So yeah, can cover multiple products in a consignment. Had a few questions on that. Just put some wording to say you're indicating the goods or which goods you want to be claiming preference for, and then you know it should be self-explanatory really. And there's no set way of doing that. And again, if you want to send multiple goods that are identical within a 12-month period, you can use a single statement. The import agent declares the appropriate document code, and then once those goods keep rolling through for the next 12 months, it's fine. We just use the same code and reference for it. So that should be make life easier as well. And the goods have to be identical though. We get quite a few questions about importers' knowledge. Really, we're expecting the importer to have a good understanding about where those goods are coming from and whether she meet the rules or not. And they should be trying to get a reasonable amount of evidence, commercial documentation from that supply chain, so they're satisfied that the goods are actually originating correctly. And we've got some examples. I won't go into them all; they're on the slides, but you can take a look. You don't need anything to export, anything like that. This is all about importation. Yeah, so for importers' knowledge. Suppliers' declarations. Yeah, we get quite a few questions about these. Again, they don't need to be in place for the first year. One thing I would say is if you're accumulating goods from the EU, so imagine you're a GB manufacturer, and you have an EU exporter who, let's say you assemble cars in GB, and the engines are coming from the EU. Now, if those engines are made up from multiple parts from various member states, and then the final exporter in the EU has put those parts together into an engine and sends them, you don't need the supplier declarations from all those various EU member part makers. They go to the EU exporter. You then have a declaration on origin from the final EU exporter. So it might be a case of saying each of those parts make up 10% of the final good value. And then you get half your goods via the EU. Essentially, the state of origin is pretty much saying, here you go, here's an engine, 50%. You can say it's 50% from the EU accumulation. Great. You only really need supplier documentation if you are not the supplier of the goods yourself, and you are. There's no one in the supply chain between you and the supplier. Okay. So if you're getting them from the EU, don't worry about getting supply declarations from all the EU parts if you have someone that's pulling all that stuff together in the EU for you, and of course vice versa. And yeah, there's some detail really about how supply what supply declarations cover and whatnot. And I've got there's a bit of a diagram here for you to sort of see. It's all about a chain. It's all about passing documentation down the line. And really if you think about each actor in the chain should be taking care to think about rules of origin and should be passing that documentation down the line. And if the customs authority at their end has questions, it's very easy to provide the answers with the documentation chain. And we've got the various this is in the published guidance, but we've got the various documentation codes and whatnot in the slides as well, in case you're struggling to find those. And just very briefly, because I think we've run out of time, we've got some easements. If you're importing goods into Great Britain from the EU for the first 6 months of the year, then you can essentially make a delayed declaration. And that includes rules of origin documentation as well. So you can provide the rules of origin, declaration of origin, when you're making that supplementary declaration. Okay, so this is all part of the staged import controls easement. And yes, it is only one way, and no, the EU are not going to reciprocate, in case that's a question, unfortunately. And of course, we have the supplier declaration easement as well, which the EU and we have agreed on. There won't be any more easements as far as I can tell. So I'm sure there's some questions in chats to say, can we go back and negotiate something better? Can we negotiate further relaxations? I mean, the EU feel like that this is as generous as they're going to get. So I really wouldn't hold your breath, really. this is about making use of what's out there as best as possible. There's some slides about non-alteration manipulation as well, which is when goods are coming through, say, for example, going to GB from a rest of world country through the EU. And if there's any questions about splitting them and altering those goods and the evidence to demonstrate that nothing untoward has happened to them, again, this is all in the published guidance. Okay, and there's some links at the end. Okay, right. And that's me done. Thank you.
Thank you very much, Julian. We've got loads of questions here, so I think we'll kick off as quickly as possible for both you and Niall, if that's okay. We've got one here where the company says they process industrial bakeware. They've got customers in Denmark and clean goods for them. We temporarily import, say, 1,000 sets of bread bins, clean them and send them back, normally within a month. So we shouldn't pay VAT or duty as we aren't using them or keeping them. How do we do this?
I can cover that. You want to look at something called temporary admission. And now, if you're bringing baking tins in from the EU and returning to the EU, it is an EU rule. It is a unilateral rule that EU have. Ours is essentially the same for the UK, but the definitive answer is always where the goods are ending up, you need to check their guidance to see what's acceptable. I would say that baking tins, if they're essentially used and returned and there's no change to them, then it sounds like a good case for temporary admission can be made. So I'd search the rules for that.
Thanks. Aaron?
Next question. I'm conscious, Julian, you did mention that, that it'd be unlikely there'd be a renegotiated deal, but a question has come in saying, I'd like to know if the trade deal can be updated / amended to allow EU originating goods returning to the EU in an unaltered state benefit from the FTA easements.
Yeah, the EU aren't showing any enthusiasm for that. They've reiterated that returns good relief or transit customs warehouse transit sort of arrangements are the only real way, and they've no enthusiasm, unfortunately.
Next one from a company who imports 50% of their products from their US mother company and therefore pay the WTO tariff of 2.7% applicable to the product type. Do they then have to pay a further 2.7% duty when they re-export to the EU?
If they bring them into free circulation to the UK, and if they're not altering them anyway to turn them into a UK origin product, then the answer would be yes, I think. The way to avoid that would be to bring them into a customs warehouse, essentially keeping them under customs control before re-exporting. So not bringing them into the UK. You avoid the UK tariff, and then it is only the EU one to pay at the end.
Okay, that makes sense. Thank you.
In 2022, is HMRC likely to be checking that you haven't used a different / wrong 4-digit heading code just to meet the rules of origin and the track 0 tariffs?
Yeah, we might be, yes. I mean, obviously, we don't go into details of our compliance program. I do think we want to be distinguished between those that are struggling and making innocent mistakes and those who are deliberately trying to get around the rules. So, yeah, that's what I would say.
Thanks. If we import spares from Switzerland into the UK and then export to the EU, how does the tariff work? And is there a time frame under which they become UK goods when kept in stock?
There's no, time's rather immaterial. If you can't, keeping something in the UK for a long time doesn't turn it into a UK product. It's baked in where it came from. You have to alter it. You have to process it sufficiently to turn that in. The rest of the Swiss thing, I don't know. I'd have to look at the supply chain really to have a better understanding of what's possible. I mean, we have a trade agreement with a country. If you have a product that is UK origin and it meets the rules, then there's a good chance it will go in at 0 tariff. If that good is from elsewhere and you've just kept it in the UK, then you're exporting to a country that we have a free trade agreement with, then you're going to have to still pay tariffs because essentially it's lost that preference wrapper, as it were, by bringing it into UK free circulation.
Thanks.
Niall, I think this one makes actually reference to the example you had on your presentation. In the change in tariff heading rule, in brackets mug, if the tariff code changes but the clay content which is bought in from China is more than 50% of your selling price, does the product still qualify for tariff-free access?
So that'll depend on the specific rule, but you'd only need to add 50% value if the rule was a change in tariff heading and max non 50%. So only if you had to meet both elements. If you've got a choice or it's just a change in tariff heading rule, then you just need to change tariff heading. You don't need to worry about the value of the non-originating material.
Thank you.
This company purchases a product from Italy and then a product from France, and then they assemble them in the UK to make the finished good. What would the origin be of that product?
So it will depend. So they're exporting it from the UK. So if they're able to claim preference and it meets the rule of origin, then it will be a UK originating product. So anything that's exported from the UK and exports zero tariff under the free trade agreement is a UK originating product, even if it's using inputs from the EU. But you will need to apply the product specific rule for that product when you're exporting it.
Thank you. Next question. With reference to the non-originating materials example about transmission shafts, if the materials fall into a different product classification to the finished goods, then does this make the non-originating percentage irrelevant?
So again, that goes back to what the specific rule is for the specific product. If you have a choice between a change in tariff heading rule and a 50% max non rule, then you can use either. So whatever is easiest for you to comply with. But if the rule is only a max non rule, then you just have to demonstrate that your non-originating materials are less than 50%.
Thank you.
Thank you. So this company supplies goods directly to France on behalf of their French distributor. The goods are then being sent directly to their client in France. However, they're being asked to send a commercial invoice with the value that they're selling the goods to the distributor. They don't want to do that because they don't want the end client to see the value, as it's not the price that the end client's paying. So the only way this company's found to resolve this so far is to send the parts, which are compressors, directly to the distributor, who then needs to send them on. So there's obviously an additional cost, labour, not very environmentally friendly here. Is there a way that you're aware of sending the goods directly to an end client in Europe on behalf of a distributor, but without detailing the buy price of the distributor?
I'm not sure either of us can help with that. It sounds like a commercial terms issue, really. So yeah, we do get a few commercial sensitivity questions, but I'm not sure we can be particularly helpful, unfortunately.
Okay, thanks.
Next question. To confirm, 50% of the sales value and not the total production cost.
So what we're talking about here is the X works price, and there is a definition of that in the agreement. But essentially that is the price you sell your product for to your customer, and it excludes any transport or any taxes. So we call it that it's the price paid at the factory door. So it's everything that is included in the price that you sell to your customer.
Thank you.
If our material costs are around 55%, but we know that most are UK based, do we need to keep records on the non-EU component parts?
I'd say it's a good idea generally to keep all documentation. So no matter what you're using it for, I think it's a good idea. I don't think it's going to be directly applicable to claiming origin or otherwise, but I would keep it as a general principle. You never know.
Can value add materials include the added value from UK design, IP, brand, e.g. £20 China product sold for £100 due to the brand, IP and margin?
So you've got to look at the specific rule for the product that you're selling, and if it's a max norm rule, then the relevant things here are the ex works price, so the price your customer pays for the product minus any taxes or transport, and again the definition. Please look at the definition in the guidance or in the text itself, and then you work out basically the value of a non-originating materials. And you see if that is over whatever the threshold is. If it's 50%, is the value of the non-originating materials over that threshold. But in any event, you need to be doing some production in the UK. So you need to go beyond insufficient production. And again, there are a number of in the text of the agreement. There are a number of examples of what that production is. So whichever way you look at it, whatever rule you're complying with. You're exporting from the UK. The thing that you're exporting is a UK good, so there needs to be some production, some processing in the UK.
Probably time for 2 quick questions here. If we buy an electrical part manufactured in China from a UK agent who's bought it via the warehouse in Germany, then it's shipped into France as a spare part, having done no processing, where do they stand in terms of tariff?
If you've shipped them if they've gone to free circulation in France and they're unaltered in France, then if you then export them to GB, they're going to be eligible they're going to have to pay a tariff. The way to avoid paying a tariff is to keep them within the customs control.
Okay, right. One very quick one. How does preferential status work as rules of origin? Is it sufficient for a supplier to put a preferential status confirmation on an invoice to confirm its UK or EU origin?
Yeah, there's an actual set of words. It's in the TCA agreement and it's in our guidance that they have to put on the documentation to say, we declare these goods are meet the preferential rules. So yeah, there's a pro forma set of words that have to go on for that statement.
And that's on gov.uk?
Yes, yeah.
And not be in the links. I think that's all we've got time for just now. What we'll do is we'll send the questions over to our 2 panelists, whom we thank very much for today's presentations, and see if we can sort of chunk them out into themes and come back with some answers that might help those that we didn't actually get to. So just really quickly now, I'm going to